All right, welcome to the NASDAQ comp chart, and basically welcome to, more importantly, stockmarketfunding.com, home to traders, investors, and everyone alike who want to be involved in the markets. We're going to give the bear market history of the 10-year period. And what I want people to know, and we're going to start out like this. This was where we were short, and this was March 1st of 2000. And in 1999, when I was training lots of people and making them lots and lots of money, is that stocks were in their biggest bubble cycle and a dollar price movement that I'd ever seen. Some stocks would run $100 in a week. Like Amazon one week. I bought it on a Monday, and that Friday it was up $100. Price lines, Qualcomm, AOL, lots of your fiber optic network stocks, just about everything. This was one of the greatest pump and dumps in U.S. history. Since then, we went straight down, and we shorted that move, and we got to the bottom there. And I'm going to draw a horizontal trend line across the bottom, and this is what I want you to know is that there was an overvalued, overbought market in a different, even though that the economy was different, but we were in recessionary mode. And generally recessions only last 9 months. However, people start buying usually early in the cycle because the stock market's forward looking 9 to 12 months out. Well, we went straight down, and then we hit that bottom in 02, and we started to move up aggressively. Alan Greenspan gave the lowest interest rates to overnight money in monetary policy than we had ever seen. And basically it started the housing boom and a bubble. We had the war that came along with it. We had the exuberance in America at its finest until we got right up to here in 2007. And this, like any economic expansion or stimuluses that had kicked in, lasted for 4 years or so. And what was contributed to it is that we had made that top, and the housing bubble was in full swing. And the financial services industry was in full manipulation and putting all kinds of various different kinds of products that led us to catastrophe here. And once again, what I'm telling you is this is another so-called recovery and expansion that they tried to put in. And this all happened right here. Once again, let's go back to the date of this. Ironically enough, 3/1 of 209 was that bottom, just as 3/1 of 2000 when we started aggressively selling short, and boy did we make a lot of money there. And not only that, in 07, on 10/1, 11/1, we put in a top and we sold short. StockMarketFunding.com, Mario Marciano, 30-year veteran, calling the top, calling it long before it would ever happen, and we went tunneling down. Straight down, fundamentally, economically, and everything that happened over here, and all the manipulation in America, and all of the extreme manipulative lending practices, and the debt structure in America had started to come to an end and fail here. And we went short here just as we did over here. Now, what I want you to know is one thing. The so-called stimuluses, which I believe in this period is quite different than any other period in U.S. history. And we have more of a debt deficit than any other period in time. We've got spending out of control, government's out of control, but then people are wondering why the market went up. Well, I understand why. Professionals don't understand why, in my view, because they don't know what the gimmicks are. And all they did was they shorted it down like we did, and then they bought it. They had to buy to cover, and as they kept covering, people kept chasing it. They always like to chase things. And what I'm saying, in forward-looking years, we will have another collapse. And I did say that was going to be tomorrow. But here's the important thing on this tape about the NASDAQ bear market history, is this. You had a major, catastrophic, systemic bubble in the tech sector here. Here, you had a major, catastrophic, systemic reversal, meaning that the housing bubble. You had two major bubbles within a 7-year period within the bear market history. We came all the way back down to where that failure was. So everything that happened here in this exuberant, irrational move, and how America got siphoned out of their home equity here, is it all failed. And you were right back here to number one. And all the gains, remember, manipulation is never sustainable. Dishonesty is never sustainable. Irrational exuberance is never sustainable. Now, we are right back in it again, creating another bubble. It is an election year in 2010. And what I'm going to tell you is, as we move through the cycle, we have a 10-year history that starts. As of Monday, March 1 will be the full history of the bear cycle. And we can see that where the original bear cycle started, from that exuberance again, it all failed. It always has, it always will. And American people that live in this economy are quite different today than they were in that bubble and this bubble. And you had two major catastrophic bubbles, and all of the gimmicks that Wall Street provides for you and everything else. But there were great, oh boy, you could have made all that money down like we did. Then you could have whipped it and you could take it, because you're a trader here. And we teach you how to take advantage of the moves. And we teach you how to take advantage of it. And this is a monthly chart. So, as we move through 2010, we're going to come up to a 10-year anniversary. The 10-year NASDAQ bear market history that I have so kindly pointed out to you. Stock fundamentals and economic fundamentals moving forward with the amount of stimuluses that we put in to create the exuberant U.S. deficit. And each state in the Union in America are not very well off. So therefore, I'm going to stop this tape and I'm going to go into tape number 2.